Hi there, I'm Tyler Ballhorn, and this is the Stockscores Market Minutes for January 22nd, 2013. This week's topic, where there is smoke, there is fire. I'll show you how to find the hot stocks in the market. A reminder to subscribe to my free weekly newsletter at the address you see on screen, stockscores.com/newsletters.asp, and also subscribe to this YouTube channel so that you can get instant updates anytime I upload a new video. All right, where there is smoke, there is fire. Most stocks, most of the time, are not worth trading. What I mean by that is most stocks, most of the time, are trading with their typical correlation to the overall market index. And in that regard, they are normal stocks that are not likely to beat the market. If you want to beat the market, you have to focus on the stocks that are trading on their own story. Those that can attract a crowd because they have something going on significant fundamentally that can drive abnormal price movement. These are alpha stocks, and they tend to move faster than the market, so you can beat the market. There are two keys to finding these stocks: abnormal price action and abnormal volume. We can use the Stockscores Market Scan to search for alpha stocks throughout the trading day using the abnormal price and volume action filters, which I'll show you right now. All right, so here we're on the Stockscores Market Scan tool. You can see that we have a wide number of filters here that we can use to search the market. We could look for stocks making certain price gains, breaking through resistance, support with certain technical analysis indicators, and you can use any combination of these things as you go through this tool. Now what we want to do today is look for stocks that are making an abnormal day up and abnormal day volume, right, like that, using those two filters, and then we can set a minimum number of trades of 250 or more if we want. We can also ask the system to look at either all Canadian, all American, or specific exchanges. But when we run this report, it goes through every stock that trades in North America, and it finds those that were trading on statistically significant abnormal price and abnormal volume action. This is how you find alpha. These stocks have got the best potential to be moving on their own story because there's something going on there. There's a crowd that's flocking to that stock. The next step is you can view the charts of these stocks and look for the right kind of chart pattern setup that is indicative of a stock that is just starting an upward trend. All right, let's get into this week's analysis, starting off with the S&P 500. Last week was an important one because the market broke through resistance on Friday, or pardon me, on Thursday, and then of course we had a long weekend for the US markets, and this now looks like a market that is likely to continue to rally. Now on the SPY, the long-term resistance, which is the highs that have gone back a number of years, is at about 155 or so on the SPY. So we've still got some upside here, but not considerable upside before we hit that long-term resistance at the all-time highs for the SPY. The TSX is now starting to play catch up. It has certainly lagged the US markets this past year, but it too has now been able to break through resistance. It is moving away from its upward trend line a little bit, and that increases the chance that it will pull back before it goes higher. But it is still in the early stages of the upward trend, and I expect that this market will do well as the global economy improves and commodity prices get better. The Russell 2000 Index Fund ETF IWM has also broken through that upward level of resistance at the red line there. It is also running away from its upward trend line, which I have drawn in green, and that increases the chance for short-term profit taking, but there is still no signs of that profit taking, and therefore we must be bullish on this market. This is the chart of the 20-year Treasury Bond Fund TLT, and it has broken down about a month ago. Hasn't really plummeted into a downward trend, but the fact that it is in a sort of a bearish cycle for this chart is positive for stocks because, of course, as money comes out of treasuries, it will ultimately find its way into the stock market. The US dollar is in a bearish pattern. We can see consistently falling tops towards support at the green line. That too is a positive for stocks. As the US economy or the US Federal Reserve continues to print money, we should expect that this currency will wind its way slower, although many of the other countries in the world are also printing their currency, so it's sort of a race to the bottom in that regard. The euro has been actually strengthening and moving up towards resistance. The trend here remains up. This chart of the euro tends to correlate with the stock market chart. And so as long as this thing is in an upward trend, we have something supportive for the stock market. Gold is in a downward sloping channel, but really testing the maximum upward boundary. This week I drew that upward boundary as leniently as I could have, and we are testing that upward boundary, and the bottoms aren't falling as quickly as they had in the past. So we may see a break of that downward sloping channel in gold. I'm not ready to call this bullish yet. It certainly has work to do, but with that weakening US dollar, we could see the chart for gold improve even more. Watch for a break of that red line in the downward sloping channel. And here finally is the chart of oil, which has broken its downward trend line and looks likely to head higher. I am now bullish on oil where I have been bearish or neutral for some time. The chart here does look positive, and it looks to me like oil will continue higher, although given the gains over the last 2 months, a little bit of a round of profit taking wouldn't be out of the question. So my outlook then, bullish on stocks, both Canadian and US, neutral on gold. It is trying to reverse that downward sloping channel, but it hasn't done it yet. Bullish on oil. Stocks and oil are in bullish trends while gold is working on a turnaround. The outlook is positive, but a short-term pullback is very possible given the recent gains. While the market is strong, participation outside of the index components is lagging. I would like to see a broader range of stocks participate in this rally because thus far it's really the big large cap names that are leading the way. Well, that has been the Stockscores Market Minutes for January 22nd, 2013. Have a great week in the market and trade well.